Sign up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling a problem with us out here. We have the Dow Industrials down 51, up 51. NASDAQ up 108. S&P's up 18. Gold contract up $3.80, trading $19.67 an ounce. You get silver flat, $24.28 a ounce. Light sweet crude up 30 cents, $41.35 a barrel. We'll have those numbers for you at 10:30. Notes and bonds. You get the 10-year right now up one tick, trading 139.24. The 30-year also up one at 181.15. And King Dollar just can't handle price, folks. Down 226 ticks, 93.467. The euro is at 117. The yen's at 104.97. The British pound is at 129 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good Wednesday morning, man. There's a lot going on. Where do we start? Fed Day, right? Tech CEOs in front of Congress today, ahead of some big earnings for them tomorrow. And the market charges higher, man. 32, 31 in those S&Ps. I talked about in the update, man. Did you see that acceleration in L Brands, Victoria's Secret? Man, oh, man, 35% that stock is up from last night. The moves in some of these stocks are just amazing.
There's no doubt. That move there is pretty amazing. There's no doubt about it. You know, it closed yesterday at a price point of $19 up at $25. Well, how about Kodak, right?
Yes, same deal, man.
Yeah, the bottom line with Kodak, folks, someone knew something there, man. It's like, okay, we're going to get a generic drug out of Kodak, okay? Give me a break. It's a mind blower, actually. Do you know what I mean?
Oh, yeah. I mean, you started the beginning of the day Monday. They were talking about the option volume, right, maybe at 213. You finished Monday at 265 almost. That's like a 25% rise just on Monday trading. It looks like nothing because you've now gone from $250 to $24.
Right. Yeah.
Man.
That's an inside game, man, in a monster way. You have a company that basically was bankrupt, and all of a sudden they get a loan from the Defense Department for $800 million, right? Yeah.
That'll put some bids in your share price.
That's got bids, man. You'll see those insiders selling that thing like crazy, man.
I mean, 20, yeah. You were just sitting at $2 forever, man. How about $24? I'll take that. Thank you.
Yeah, no doubt. So let's go take a look at this dollar first. So we got the Fed coming out, folks, 2 o'clock. Bottom line, dollar's been giving it up on price. Once we broke this, 94.650, and we're only, basically 1,000 ticks underneath it, 1,200 ticks underneath it. That's saying 88 is on game here. And what I expect we're going to see out here is that when the Fed comes out, the status quo is that, okay, they're going to be dovish. My take here is that, they're going to be dovish, but there's going to be something in here that's going to actually accelerate this dollar on the way down because it just wants lower price. And the euro, higher price. The yen, lower price means it's stronger against the U.S. dollar. Pound, same way. These things are screaming higher. So we'll see where the rest of this is going to shake out. But it certainly looks to me like it's going to be fast and furious when this announcement comes out. If we take a look at the NQs, what you're going to see, the NQs are what started the market not holding price yesterday. So what we've done here is that, you've come back to, right when I got in the air yesterday, because as soon as I got in the air at 3 o'clock, that's when they start selling this baby down. That's right where we are right now, on the way up, Get the NQs up. Let me get the chart up. Sorry about that. There we go. There we go. So you get nice. The NQs right when I started the program yesterday. And those NQs, they're the ones that sold this thing down. They end up taking the S&P with it. So
it was 120 points, man, from like 10,640 to 10,520, and we're now back above 10,620. So yeah.
Yep. And it was those. It was the chips. It was the chips that took it down. So we'll see where this shakes out. As you were just saying, tomorrow is the monster day, man, for the NDX 100.
Yes.
Today, I get, they in front of Congress today, you got the big dogs out there, no doubt, in front of Congress today. and we'll see just how much they're going to basically press these big companies on antitrust matters.
And then tomorrow, Apple, Alphabet, Amazon, along with other companies, of course. But those three, we talked about, they represent 13% of the S&P 500 just themselves, man.
That is amazing, man.
Yeah.
And if
they're about $4 trillion market cap between the three of them.
Well, you know what? Listen to this. This is crazy, man. There was an article on Bloomberg last night that, so, was it the five? Okay, what stocks you just said? Amazon, Apple, Google,
Alphabet, Google,
Facebook,
Microsoft probably in there.
Yeah, there's one more. Okay, so those
maybe
five,
Facebook and Microsoft.
The top 5 NDX stocks that we have, folks, are actually bigger. Listen to this number. This is sick. This was on Bloomberg last night. That number is bigger than the 5 largest exchanges in Europe.
Okay, yeah.
Isn't that crazy?
Everyone in Europe's got iPhones too, man, so why not? Apple owns everything. No, I kid,
but what I mean, just 5 equities are larger than the market cap of the DAX, the FTSE, you name it. That is like a mind blower, man.
It sure is, yeah.
It's like, you got to love it. I mean, the reality is that, great, folks, they're American companies, and it's freaking awesome, you know. It's going to be interesting. I was reading some of the Bezos opening speech today. And, you know, the bottom line is that he's going to start right at the beginning. He's going to say, hey, listen, man, when we started this thing, we were a bookseller. eBay, so eBay Marketplace, Tom, right, was 5 times larger than Amazon's Marketplace. And you know, he's making the case that, hey, listen, man, I paid attention to my customers. And that's why we're so big. That's all. We're just customer focused on a huge way. But imagine eBay must be going out of their mind. Well, they already lost it, okay? But the bottom line is that is pretty intense, man. When you have,
in the early days of eBay, if they make a transformational shift, right, to a business plan like that, there's Walmart could have done the same thing, and Amazon wouldn't exist, you know. So
there's a case for all of it, and of course, the inside case on the other side, folks, is that, you know, the bottom line is that there's no doubt that whether it's Amazon, Google, Apple, they use all the data that they have in order to basically cement their position even more and to basically stop growth, I'd say. I mean, that's the reality on the other side. I mean,
the one thing I would love to see, man, is our privacy and our data respected and some regulations put in place for that. Because the other argument is, well, you can't have regulations, that hurts job growth, right? You know, and you know, if you extrapolate that argument out, it's basically saying, well, if you let these companies do anything they want with your data, they'll be able to make more money off of it. And it's like, okay, we have to have some regulations here because they have so much data. They're going to have our position down to the foot every second of our day, right? Anything we look at, anything we touch. So you better, we need some action.
And it's more than money, it's power. It's
everything, right, for sure.
Right. There's no doubt about it. Yeah, it's pretty wild. One of the targets, you got to love this. eBay paid attention to customers, too. Now 7 execs are in prison for harassment of a blogger who spoke ill of them. Oh, that's wild, man. I'm telling you.
Hey, I was just looking up that DAX, like you were saying myself. I was curious. So it must be so many indexes that the 5 of them eclipse, because just Apple alone early this year eclipsed the entire DAX, man, the 30 stocks in Germany.
That's sick.
Yeah, so that was when they hit about 1.4 trillion. This article, I think, from February or January of this year. Lots changed, but my guess is Apple, from where they've gone, that they're probably still.
You gotta love that, man.
Yeah.
Stay right there. Tommy and I come right back. We're gonna get those oil numbers for you, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 82, Nasdaq's up 94, S&Ps are up 19.5. And let's go over to that whisper number, Tom. So one of the Tigers are telling us, so last night, let's say we get crude inventories. Okay, so the whisper number is a minus 3.3 million barrels. The survey number is a build of 450,000 barrels. Okay. And last night, the API... let's see, was 6.8 million barrels, a drawdown.
Okay.
Man, we got some action here, man.
Yeah, so big drawdown on the API. The analyst number had been pretty close to even, but as a result of that big API drawdown, you're seeing obviously a shift where you got that whisper number, millions of barrels, they're looking for a draw.
Okay, so let's get this up here. Active contract, see what we're looking at. So you're at 4140.
4140, you like that number?
Yeah, I do. Yeah.
It's pretty amusing how comfortable oil has become right next to that low of the bar, the kind of the high of the gap there, 4105.
It is.
Just right there, man. It's just a magnet pulling this thing all the way from June 8th. It's July 29th. On June 8th, we were within $1 where we are right now, man.
I know.
You know, and we're approaching 2 months. And we're within $1 where we were in oil after all that volatility.
No doubt. Yeah. Okay, so I would say that this oil wants to try to get to 42.51 again. So,
okay,
WHIS. So that would be a large drawdown, right? Yeah,
that's right. You're looking for higher prices. You're looking for less supply of oil in the market.
Okay, so what do you think? Give me a number.
Minus 4.5.
4.5.
Minus 4,500. Nope, one less zero. There you go.
Okay, there we go.
All right.
Let's see where this is going.
So the market, and it'll be, you know, that report contains so much that it's always interesting why, let's say there is a drawdown, right? Now that's going to hit, it should hit the oil market. It will factor into it. But economy-wise, it's like, okay, if there's a drawdown, Is it because nobody is making oil because they're worried about the economy and they're worried about oil prices, or is it because people are using oil, right?
Right.
I anticipate it's probably because we're not producing it at the levels, considering the economic slowdown we have going on right now.
Well, our man Nico's using oil.
Yeah, he's driving across the country.
Yeah,
man.
Nico's out going after Bigfoot, folks.
That's right.
Yeah, totally, man. You gotta love it.
Okay.
He's got a 2-week deal going. He's in the middle of the woods right now. Bridget just showed me a picture the other night, man.
I saw it, man. I'm keeping track. We talked about technology, man. I got Nico on my radar and on Facebook, so there you go.
I love it.
Yeah.
Look at this. Oh, KO, we got to go look at this Kodak thing. This is like, this just blows my mind. Okay. Oh, so they just had to halt the stock because of volatility because it's gone up so dramatically.
It's up to 36 now. When we started talking, it was at 24. What happened?
This is, yeah, let me tell you something. So 2 days ago, folks, the stock was at $2.13. And when they just halted it, it's at $36. Man.
Yeah. And, you know, I'm sure there's going to be many articles trying to be written about why this company was chosen, right? What that represents in terms of their future.
Oh, yeah, I want to know who this George Carfunkel is. He's the principal owner, man. So I guarantee you George Carfunkel is hooked in.
Well, he has 6.3 million shares, and 2 days ago that was worth about $12 million. And today it's worth, $200 million.
Yeah. Not bad, huh?
No.
12.3. It's pretty. It's the whole thing. What's confusing about it is that the argument I think is going to be made that they're in the chemical business, right? Because you get chemicals to make whatever Kodak is making. But it's like, okay, is this the only? How do you go from that to generic drugs, right?
Yeah, I don't know. I don't know. Maybe I'm literally just throwing it around thoughts that pop into your head, you know. But maybe you have production capability that's not being used because Kodak's in such problems, and maybe they have facilities that you can just turn it into that. I don't know. Maybe that was their pitch. I have no idea. But
yeah, whatever it was good. That's
$1 billion sale.
It's the Rolodex, folks. This is where the Rolodex comes in. Now, granted, this is only a loan, okay? But granted, let me tell you something. The way Kodak's numbers were, they couldn't get a loan for $1 million. Never mind of $800 million. Okay.
And it might be a loan that says, "Here's a loan to get it produced, and then we're going to buy all that product off you that you produced with the loan that we just gave you." Right. I'm just, you know, it's just, not that we are, but there might be an automatic built-in if you're producing generic drugs that have a built-in demand, or you know.
Oh, there's it's oh my God. This is like, yeah, just it's a total mind blower.
It sure is.
Yeah, the giveaways are pretty intense, and if you want to really get your head wrapped around it, you know, I'm sure there's going to be other drug. There's going to be some great stories. That's the real bottom line as to, you know, how did this come about.
Yes, for sure.
You know,
if you're a financial reporter or of any kind right now, you'd love to get that story, man.
Yeah, right.
Let alone a reporter overall.
This is pretty wild. That's right. I remember that. One of the Tigers are telling us, so listen to this, that Kodak once tried to move into cryptocurrency, and I remember that, okay? And they got it pumped in. Man, these companies can move, man. You get them credit that they'll try anything and everything just to get something off the deal. There's no doubt about it, So let's go take a look at some of the higher volume equities. Well, actually, let's go look at GE. You know, GE came out with numbers last night. Bottom line, down 28 cents. Their PR was pretty cool. Bottom line is that sees lengthy recovery ahead of after progress on cost. Well, let me tell you something, folks. GE, well, here it is. The company burned through $2.1 billion in industrial free cash flow in the second quarter, less than the $3.3 billion analysts had expected. It's like, really? It's like pretty wild, man. I mean, imagine burning to 90 days. Oh my God, that's Boy, when you collect assets that are not making money, man, you better be really careful. And
hey, so let's jump to GM because you want to talk about staggering numbers, man. They have their numbers as well, right? So an $800 million loss, but the cash burn for this company, man, let me scroll down here. Give me a moment. Okay, the company burned through about $8 billion in cash during the quarter,
really?
A number that analyst investors closely tracking. I said, yeah, you better be, man. And GM said it expects to spend between $7 and $9 billion in the second quarter. So you're talking about $16 to $17 billion in 180 days. Poof, gone.
Wow.
Yeah.
That is something else, man.
I know. So and GM, man, you know, that's a lot of cash, man, you know, and that's cash flow. That's not like a loss of $16 billion, but no matter how you tweak the numbers, man, that's $16 billion that you had 180 days ago that you just spent. Boom.
Yeah. Look at that. The sales were cut in half. $32 billion last quarter, $16 billion this quarter.
Yeah.
Big numbers, man. Stay right there, folks. Tommy and I come right back. We're going to have those oil numbers for you. Dow Industrials right now trading up 54. Nasdaq's up 101. S&P's up 19. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. It's a monster.
Okay.
10.61 million barrels. Drop.
I guess we should have went bigger. Go big or go home, man.
Yeah.
man, maybe it's both. Maybe nobody's producing oil and everyone's back to using it.
That is one monster number, no doubt.
Slight reaction, but not as staggering as you may think. Up about 19 pennies from about 41.32 to start it. We're sitting at 41.46, so pretty muted reaction right now. I mean, we're right back to where we were at about 8 a.m. this morning.
So you get gasoline inventories rose 654 barrels. Let's see. Here it is. Here's the good one. Okay.
Nice.
So you get the estimate was a draw of 2 million barrels, and it actually rose 654,000. That's gasoline. Distilled, which is the diesel, the estimate was a rise of 1 million barrels. That was 503,000. The big one is that draw, man. 10.4
10 million barrels, the drawdown.
Big number.
And oil's like, we're going to sit right at 41.40, man. That's where we are.
Now that's a heads up, man.
Yeah.
That's like, wow. But the market,
it is, and maybe it's just, that like I had mentioned, oil, the world needs it. It's sitting at $40, man. There's some consistency.
Hey, you got in the top 10 anyway. Look at this. I love it.
There you go.
Oh, 10th place. There we go. Okay.
10th place, top 10.
Not bad.
There we go.
Pretty good, man.
Yeah.
Hey. We have still got the other trophy for the gas.
Let's go.
Send
Mr. Michael Bloomberg a message on that Bloomberg terminal. Ask him what's up.
Exactly.
Hey, how about gold? Why not, man? Up to 1978. Erased that entire $75 move from yesterday. Pretty remarkable.
Isn't it? This is pretty intense. And what I expect you're going to see, folks, now what has happened, folks, is that we have transferred to the December contract. We just went from the September to the December. So as you do go forward, the prices are different. And so this contract had actually traded. Now, this is a perfect for a Basil Chapman, right? This contract had traded to $2,000 even, Tom.
Pretty cool.
The night before, exactly.
I got you. Okay.
So what I expect we are going to see out here, folks, is that the bottom line is that when the Fed, comes out at 2, and then we have a news conference at 2:30, I think these currencies are going to move around. We'll see. I can't picture anything that is going to be so outlandish that the Fed's going to say. But the way the markets are set up, it's like, it's cool, too. We have Teddy Cakestar coming on at another 5 minutes.
Yeah, next segment.
So we'll see what he says about these currencies, because these currencies, folks, are on a move. Man. I mean, big time, so.
Yeah.
We go take a look here. Watch. If you look at the euro, if you're going to take a vacation, folks, okay, next year, whatever, in Europe, I would start changing some dollars into euros, man. I'm sorry, what'd you say, Tom?
I was going to joke when Americans are allowed to leave our borders because other countries won't take us right now. But
right, that's right. But bottom line is that, this euro looks to me like it's going to 125. You're at 117.
Yeah.
If you're going to go to London, you're going to go to the pound. You take a look at this pound. The pound's at 129. This thing looks like it wants to go to 145. So, and what happens, folks, is this. This is where I think it gets easier to understand when you get moves like this. The pound has been down since 2007. The pound was $2.11 to $1 US. We got all the way down 5 months ago to 114. So you can imagine the type of wealth that was lost there, right? You see how that works? That's like sick.
Yeah.
And so it totally makes sense that you come back to the mean. You don't have to go back to that, but the mean is somewhere around like 150, 145. Do you know what I'm saying? So
yes.
It's like, and what has happened, it seems that you're getting a lot of news, folks, that it's a big deal that the dollar is going down. Well, it's not. Let me just show you something with the dollar. The dollar has been high for a long period of time. We bring this back 30 years or something, and you're going to see the other side of that is that, the dollar basically is 95 to like 78. It's been in that range for a long period of time, outside of the case from, what is that, that's 2000 to 2003. Other than that, that's been the range for the last 50 years. How many years I got here? Let me see. Let's do it 50 years.
How far does it go?
50 is it. I don't even know.
30's
it brings it back. So that's the range. It's been the range.
Yeah.
You know what I'm saying? So when you hear that it's the destruction of the dollar, well, it's going down, but it's, nothing's can stay up forever, nothing's going to go down forever. That medium range is real. There's no doubt about it. I'm sure that's what the Fed's looking at, too, saying, hey, this is, not the end of the world. People are used to now a strong dollar, no doubt about that. But that's why I'm saying if you're going somewhere and you're actually going to use that currency, that's really not even a trade. What that is that you're just saying, okay, I'm going to spend 10 grand in Europe. Well, turn around and get 10 grand of euros. And bottom line is that no matter what happens, you get your 10 grand to spend in Europe when you go. Do you know what I mean? So
yes, no, I'm with you.
What else? Oh, Shopify.
Oh man, right?
This is an animal, folks. When you look at Shopify,
staggering numbers, man.
It is. It's up $105. It looks like it's going to be an ABC structure up. Yeah, it is, and it's a big one too. It's blowing away the high of 1,074. So you got. Let's see. We put this on.
I mean, they had revenue up 97% from a year ago, and the expectation was revenue about 515 million, give or take. I'm ballparking, I remember, and they came in at like 715 million. Man, just huge beat across the board.
Hey, look at I got these numbers up right now. If you watch on Tiger TV, folks, and it is having a company like. So if we go back 5 years, in the quarter they took in 86 million. As Tommy just said, this quarter 715 million.
Yeah.
They're making money, and these growth aspects are beyond belief, okay? United States, they're growing at 56%. Rest of the world, 88. United Kingdom, 58. Canada, 52. Australia, 55. It's a big number. Why didn't we buy that when we went to Shopify?
Listen, I've learned it a few times, man, and I try to listen to myself from now on. When you notice those trends in your own life, and you pick up on those things, I've talked about it myself on Amazon, man. I was one of the early adopters. I think it's either 2009 or 2011. I was a Prime member, and I was a Prime member because as a consumer, I recognized the tremendous value of a program that was like pay $60 or $70. And back then it was just, we'll ship you anything you want, 2 days free. I was like, that's revolutionary, man. I'm going to sign up for that. That's amazing. I wish I had bought Amazon shares because it was revolutionary, and that's why Bezos is the richest man in the world right now.
Yeah, no doubt. And the owner of Kodak is going to catch up with him pretty quick today because if he sold some equities, not that he can. Well, I don't know. The bottom line is that it just opened for a second and traded to $58. Now it's halted again. So the trading volatility that you see in place here, folks, it has to do with the percentage moves. And needless to say, this percentage move, they open it for a split second. It goes from 38 to 50. Let me just see something here for a second. Because one of the Tigers said the float is so small. It is. Oh, my God. Look at this. So the float on this, folks, is only 1.7 million shares out. Oh, no. 43 million. It's 43 million. That's not bad. It's not bad. Stay right there, folks. Tommy and I come right back. We're going to have our man, Mr. Teddy Cake Stack. We are going to be talking currencies.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 55, Nasdaq's up 116, S&Ps are up 21. Let's go over to our man, Mr. Teddy Kegstad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Kegstad, we got a lot of action out here today.
We certainly do. The dollar is just continuing to get hammered and it's making some nice new lows since we've talked last week.
Yeah, no doubt, man. So what are you thinking here, man? I mean, we broke that consolidation.
Yes.
And it seems that it's getting ganged up on. I mean, euro wants higher price, pound wants higher price. Yen wants lower price, stronger against the dollar. It's pretty intriguing, man. I mean, well, it makes sense, right? I mean, that's the other side of it. If the dollar's going lower, those are going to go higher. So where do you think we can go?
Well, I think that, the dollar as a whole for the past 3 years has been pretty much in a holding pattern.
Yes.
Now, you and I, we've been talking for the past few weeks, and we've been kind of edging towards the dollar bear angle for a while now. And we've been talking, remember how we talked about the high and the low that was set in the dollar index in March when we had the extreme volatility in all the markets?
Yes.
And that was something that we had been slowly kind of, in a holding pattern. But as we slowly eroded, we took out the lows last week from March. That was a very big signal on a weekly basis, on a short-term basis, intermediate-term basis, and that confirms that. I mean, when you have the high that was set in March, that was a lower move high, and now that we've taken out the low from March, that was a higher move low. That's confirmed our longer-term trend now that we're definitely in a bearish cycle for the dollar, I think.
Yeah, and I guess for currency traders, I mean, it's pretty cool. You have a lot of choices out here, man, right? I mean, because as that happens, the euro, we're at 117. I mean, the next, I think was it 132? Let's see, what did it? Well, yeah. Mm-hmm. I mean, that's game to 124, man. You got some resistance up here, but it seems like 124 is game there. The pound, wants a lot higher price, so there's going to be a lot of movement around here in this currency.
I think so for sure. And I think the dollar as a whole, I mean, remember how we've been talking about the interest rate curve and especially how gold continues to pound, just blast through resistance. I mean, this is where big money is going right now. And remember I was talking a couple weeks ago when Tesla was making the high with the option pricing, how explosive it was and how buying options was almost like a license to print money for a while.
Yes.
I think that we're starting to see that buffer we're hitting a friction point, meaning that this is really confirming the trend with the bearishness of the dollar, meaning that right now, like the Fed's going to talk today, what are they really going to say? For the most part, you have your short-term interest rates that have already buffered through resistance, over the past couple of weeks to the point where they were when everything was excited, back in March. The 30-year is finally starting to really pressure that. It showed that, it's consistently trying to buffer resistance, and I believe it's going to continue to do so, especially as the dollar erodes. And the thing about the option pricing thing is it's starting to get back to normal. Okay. And when that starts to come back to normal, that starts to tell me that these trends are legitimized, whereas when you have such an erratic pricing differential going on when it comes to the options and the futures and the currencies, and these are even the currency futures and the currency options, it's not just the algos that are exploding and running these things all over the place. That's showing that there's a really big change in complete market sentiment. And I'm talking about the broad market, not the short-term influences the Fed today.
I can see what you're saying, man. It's amazing. Tommy and I talk about this a lot, too. It's amazing that the option traders, in general, the whole pool, can really seem to get some stability on price over a period of time. And that's what you're really saying, that at first it was but once it gets steady, it's like, okay, man, the probability is pretty good that's where it's going to be, man. It's pretty wild how that works, man. Yeah.
Exactly. And you hit the key word there, probability. And I think that's something that we can start to come back to normal, because the coronavirus, the market's already figured out we got to live with it before whether we make a decision to or not, you know. And now I think that you're really seeing this as a reflection of the currencies. Like, you got to remember, a weaker dollar, for one, is good for America with what's going on right now. It helps to keep corporate earnings positive over the next few months, especially, So, and the dollar also has been rallying basically for 12 years. Since 2008, or March of 2008. In fact, basically, it's a 12-year cycle that just ended this March, peaking out. And I think that for us to trade lower, it's not a negative thing like, oh my gosh, the dollar's collapsing. The dollar's been so strong for 12 years. And consolidating for basically 3, buffering the highs. It's not a big deal for us to go lower right now.
No, listen, I agree. What I did, Teddy, right before you come on, I took the dollar back 50 years. And the normal range for the dollar, and the lows are somewhere around 80, and the highs are somewhere about 97.
Right.
I mean, you get 2 big spikes. We get the spike in 2000. Is that 2005? No, it's 1985. 1985, you went to 164, and then in 2001, you went to 131. But guess what? In both cases, you basically crashed out of those. So when you look at the where it's traded, so that's no big deal. You know what I mean?
No.
But, yeah.
No. Not overall. And that's the kind of thing, like I tell people, currencies are great for trending, but you can't look at the overall. Like, for instance, the euro right now is exploding against the dollar. If you look at the euro versus the pound versus the Swiss versus the yen and other markets, it actually isn't. It's not that strong.
Right.
So you think about the euro is the biggest component of the dollar index, but as a whole, it's only strong against the dollar. So does that mean that the euro is strong, or does it mean that the dollar right now is just in a corrective break, which is really lifting? In other words, what is lifting what? Is the euro lifting itself, or is it being lifted because the dollar is falling now?
Exactly.
And I think that's what we're noticing right now, especially with the interest rate differential that's going on.
Oh, yeah. And, what is going to be intriguing is that I think status quo-wise, we're all saying, okay, well, what can the Fed say? But I think whatever the Fed says this afternoon, this dollar looks to me like it wants to go lower faster. And the currencies, I think we're going to get a lot of movement in the currencies here, man. So this is going to get intriguing watching this shake out. And I don't think it's like coming out of left field, whatever they're going to say. Do you know what I mean? It's like, hey, man,
I think they're going to say what they've been saying. They're going to support, any type of package that comes out, regardless of what they pass. They're going to keep on buying the corporate debt market. They're obviously buying the Treasury market. That's not that until they say that they're going to slow down in that, which I honestly can't see them saying that for at least 3 to 6 months at least.
Easy, yeah, right. Right.
So what would shake up the markets? There's nothing that helps to secure the trend. So until we see a tone change by the Fed, which, we both, maybe you and I are wrong, and today they come out with some complete radical change. But we're not. I don't think we're living in the Volcker age right now.
No,
the 1980s.
not even close. They listen. They'd like to get back in a little inflation. I mean, the bottom line is that's what they're going to need to pay all this debt off. So
right.
Yeah.
Take care, guys. Thanks.
Always a pleasure. Great education. Really appreciate it. You have a great week, safe week, and we look forward to speaking to you next Wednesday, Teddy.
Keep selling the dollar.
Keep selling the dollar.
Thanks, Teddy.
Take care, guys.
Stay right there. Tommy and I come right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 67, Nasdaq's up 115, S&Ps are up 22. And folks, as you come over to our website at TFNN, right under featured content, you're going to see Rocket Equities and Options. I believe this is the last week for the special, Tom, right?
That's right, man. So I started this 2.5 weeks ago now. We decided to run the promotion, kind of charter membership, a launch promotion for the newsletter through the month ending at the end of this week, man. We kick off August trading next week. So you can get action through that this week. You head on over to the front page. Normally it's $97 a month. You can get it for $48.50 a month. You can lock in that price for as long as you remain a subscriber. I appreciate everybody signing up, give me the opportunity. And if you don't like it, it comes with a 30-day money-back guarantee. Just ask for that money back. We process that, no harm. And yeah, it's going all right. We have a few positions on our longer term. There's still action there. I actually had an options trade today, the first one out there this morning. So I encourage people to check it out on the front page of TFNN this week only, man, to lock in that rate.
Check it out, front page, folks. We got to go over the Kodak once again, folks. Can't wait to see who's going to go to jail on the Kodak deal. If you take a look at this, folks, Kodak used to trade 78,000 shares a day, 50,000 shares a day. The bottom line, before it got announced, it traded 1.6 million shares. Okay? I haven't even looked at the option market yet. This was before the announcement. The high of that day was $2.65. The next day it opens at $9, goes to $11. Of course, today is the monster. Goes up to $60, and they just reopened it for 1 second, and it was $31.90
That's
again.
Right. I was like, So, it's
58,000 shares to 1.6 million. Someone's going to go to jail.
You might as well take a road trip to one of those casinos that are open in Vegas if you're buying and selling Kodak today, man.
Oh, man, let me tell you.
Seriously.
Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Fed, 2 o'clock, folks. Get ready for volatility.
Fed day.
Look at it, folks.